So much for joining us. I am Pius Kojobaka. This evening, prices of petroleum products are expected to be reviewed this week by the various oil marketing companies. However, there are strong indications that prices will be reduced marginally at the pumps. More in this report.
This is based on industry data that often guides the pricing of the various products, as well as similar projection by the Chamber of Petroleum Consumers Ghana (COPEC). However, one is not sure for now about the exact margin of reduction when it comes to the various products. A careful look at the indicators showed that all the variables have gone down significantly over the past 2 weeks. One can talk about crude oil prices that dropped to a little over $70 a barrel. The Ghana cedi has also been stable against the dollar during the period, and there are projections that it could even appreciate in the coming weeks. Therefore, some industry watchers have argued that a reduction in prices may be the surest way to demonstrate to consumers that they are not being shortchanged by the oil marketing companies. This is because there are also indications that some of the oil firms may keep prices unchanged. Fuel prices have been going up over the past 2 months in line with developments on the world market. However, it is likely that this could be the first reduction in a long while.
And I want us to expand this conversation further. Joining us via Zoom is an energy strategist, Dr. Yusuf Suleiman. Thanks so much, sir, for joining us here on Business Live. And I want us to begin from the international front. From what you said, what is really happening in terms of dynamics? Crude prices have been dropping. What could be accounting for that?
So good evening to you, Pius, and to your cherished listeners and viewers in Ghana and across the globe. Thank you for having me. Yes, indeed, we do have bearish sentiments that is raining into the market. A couple of reasons, but the lead among them is the demand from China. If you notice, China demand has been depressed for consistency for some time now. China industrial activities hasn't picked up. And for a couple of last 3 months, China demand is struggling. And so with China being number one petroleum product importer globally, we are bound to have these particular prices going down. That's number one. Number two, we have some sentiments setting in, and that also, we can't take out U.S. election out of that. If you notice, just after Trump came to power, won the election, we had a lot of things happening. And if you look at the energy market, if you compare the incumbent, that is the Democrats, with respect to what the Republicans are likely to do, you will notice that there's a tendency that will have a lot of supply. And so with that projection that we're going to have a lot of supply, and that is a certainty, Pius, we may likely have another shale boom. Trump hasn't hidden the intention that he's going to embark on fracking, and that has been U.S. champion. U.S. has been championing that over the years. They've been number one oil producer. That will only be cemented. So with the robust demand going forward, and then the depressed consumption from Chinese, from China, which is the number one petroleum product importer, these things are going to have impact on the market going forward. So yes, we'll likely see the oil price around the lower 70s going even into 2025. In fact, the producers have to struggle to maintain it there. Other than that, we could likely see it slip below even 70s, and that's good for the downstream Pius.
And what could be the implications for our local market?
Yeah, so mixed one directly for the downstream is good. It's a good one. I've always indicated that if you have oil prices between 65 to 70, that is a perfect match for both upstream and then the downstream. For sure, if you look at our petroleum product prices, I've always maintained that the three things that is accountable for what the consumer pays at the pump, that is number one, which we don't expect any surprises from that side. The exchange rate, which has been one of the lead factors, and then the prevailing prices. The prevailing prices is very favorable as we speak now. The only problem is the FX, and the reason why I'm saying that is the area where we may have a little bit of challenge. If you notice that sometimes countries can be doing the right things to stabilize the currency, but because of their dependency on the greenback and the fact that greenback is appreciating. So let's say even if Ghana currency stays as it is, and then greenback keep appreciating as it is now, and it continue to get stronger and stronger, it will go till the 2025 beginning. So that's the only headwind. And so, but if you are able to if the international dynamic is able to favor and the world market remain low like this, even with a strong, greenback, I think we should be able to maintain that. So I also expect that we could see a decrease in petroleum product prices going to the next window.
That's fine.
The margin may be what we don't know. Yeah.
Again, Ghana's projected revenue from crude exports, should we be worried because of this development?
Yes, that's an interesting one, and I'll just come into that. I've always maintained that we need to have a strategy, Pius. If you have an upstream and a downstream, and you operate them as segregated entities, you're not going to have any strategic advantage. And so that's how come when oil prices try to drop, we shiver because we think we're going to lose at the upstream side. And when oil prices are dropping, when they are going up, we think we'll be suffering at the downstream side. And when they are coming down, we think we'll be gaining at the downstream side. So what I've always called is for us to link up the two. It's very important. Don't operate the two as segregated entities because there are benefits on both ends. So that if you have a formula where you can be able to cascade that benefit, wherever it goes, I think holistically, you stand a chance to benefit. And the other advantage is that it will cushion you against international shocks when you link up the upstream and then the downstream.
All right. So following up with that development, do you agree with projections that there could be a marginal reduction in prices, as we have been told? And do you think that the oil marketing companies will not have any excuse whatsoever this time, but indeed to drop their prices as well?
Yeah, the only excuse is the FX, Pius. But I think with the drop and the projections forward, we should have some marginal drop.
By what margin?
The market is, up to 1 to 2% at least, maximum 5%. Yeah. That is also the condition is just the FX. It depends on what kind of FX that they are using. If the FX remains stable, we'll have a drop, definitely, undoubtedly, because the international prices are very, very favorable as we speak now. And going forward, we'll likely, like I mentioned, we'll likely see depressed prices as we go forward in the international front.
Energy advocate for the year 2024, Dr. Yusuf Suleiman, thanks so much for joining us here on Business Life. We appreciate your thoughts, sir. Away from that, manager of macroeconomic research at GCB Bank PLC, Courage Buti, is optimistic a continuous build-up in the country's reserve will help the cedi to further strengthen against major trading currencies. According to him, once all the macro indicators provide the cedi the needed support, it will help the local currency sustain its gradual recovery. He spoke earlier on the marketplace.
We are able to intervene at the levels we are doing probably because there is enough reserve built up. What is the plan to keep building that reserve? Currently, the main strategy is through gold for reserve, and that has been going quite well. We've seen the build-up. We've gone past the 7 billion mark. I think later this month, we'll see what the new levels are. The question becomes, how do we sustain it beyond that? It means that the rate of reserve accumulation through the gold for reserve, if that is the main strategy, must be faster than the amount we are auctioning to the market. And you are doing so ultimately to win market confidence so that supply can start coming from the market sources. Because it's also not efficient, it's not optimal for the BOG to be the main supplier of FX on the market. Currently, confidence doesn't support that. So if the data, the fiscal performance supports it, the macro recovery story sounds good to investors, and they begin to regain confidence in the market, then you can see liquidity flow in from market sources, and it will limit the amount of intervention the BOG would have to do.
Now, the Peasant Farmers Association of Ghana is accusing government of diverting funds intended to help farmers affected by the dry spell under the Livelihood Empowerment Against Poverty, that's the LEAP program. According to the executive director of the association, Bismarck Norte, some of the affected farmers who are not LEAP beneficiaries will miss out on the cash intervention. Speaking on the marketplace, he urged government to ensure clarity.
We also told that they were going to give cash transfer to some affected farmers. Now, what we are hearing is that these monies are now being paid to or given to the LEAP beneficiaries. Now, our confusion is that we were told that the monies were going to farmers who suffered as a result of the dry spell. And not all these farmers are necessarily members or captured under the LEAP framework. So if there is such an intervention, how do they distill between farmers who were affected by the dry spell and the lead beneficiaries who are not even farmers? That information has not been made known to. On top of that, our information is that the lists for beneficiaries who are even getting the cash transfer are coming from political people. Our information is that the regional ministers have been given the chance to get the list of people who are supposed to benefit from the cash transfers and then forward the list to the gender director or gender district at the respective district. And then they identify some few people and then send the money to them. So there's even no clarity as to who is even benefiting, because we are told that they are supposed to be farmers, but the information is that some of them don't even know whether they are farmers or not, and they are supposed to be part of the lead beneficiaries.
You're still watching Business Live. We are back with more stories. Please stay. Hello, welcome back to Business Live. Insurance sector players within the West African sub-region have been urged to enhance their regulatory frameworks while mapping up innovative strategies to improve insurance coverage. With insurance penetration in West Africa below 30%, key industry players are deliberating on how to improve its coverage. Speaking at the opening of the West African Insurance Companies Association, representative of the Minister of Finance, Samson Akligo, called for a collaborative and harmonized regulatory framework in the sub-region to boost coverage. Here's a report.
The West Africa Insurance Companies Association WICA 2024 conference brought industry leaders together to explore the transformative potential of artificial intelligence in shaping the future of insurance in the sub-region. Under the theme, Artificial Intelligence and the Future of Insurance in West Africa, highlighted the innovative ways insurers can leverage AI to improve penetration, enhance customer experience, and drive business growth. In his welcome address, President of the West Africa Insurance Companies Association, Boubacar Jaju, noted that insurers must catch up with the fast pace of digitalization in order to boost coverage.
Over the years, WICA has provided the platform for us to enrich our knowledge of insurance, share business information, and network in insurance as insurance players in the sub-region. It is in furtherance of these noble objectives that we have packaged this conference to address the issue of adoption to artificial intelligence in the insurance industry in West Africa. The theme of this year's education conference is AI and the future of insurance in the sub-region. It aptly captures the expectations from members as global attention is now focused on AI and its adoption in the coming years. There is no doubt that it will cause some disruptions, but as they say, preparation meets opportunity.
Delivering the keynote address on behalf of the Minister of Finance to officially open the conference, Director of Financial Sector Division at the Ministry of Finance, Samson Akligo, called for a collaborative and harmonized regulatory frameworks in the sub-region to improve penetration.
The first thing, which I think is important, is stronger regulation. We must make sure that our regulation stands the best of international practice and capacity. In Ghana, we have experienced a lot in the financial markets and our financial institutions over the last 10 years. The insurance industry proved to be one of the most resilient, yet the problems that we have is there for everybody to see, and I will be happy if our Ghanaian counterparts in Kofi can share all that with you when you meet in meetings like this. So regulation, stronger regulation is extremely important if you want to build market confidence, innovation, and everything.
Speaking to Joy Business, Acting Commissioner of the National Insurance Commission, Michael Kofi Ando, said the Commission is committed to deepen its environmental, social, and governance framework to surmount any threat to the industry.
For the insurance sector, we just need to prepare to mitigate the risks that climate change brings and exploit the advantages that it brings. So climate change brings a whole lot of risk to the insurance sector, and the sector needs to be able to prepare and mitigate these risks by implementing an environmental, social, and governance framework, by improving the risk management framework itself, and to see which areas that climate change is bringing, especially in terms of product development, to develop the appropriate product there so they can take advantage of the changes that are coming our way.
The two-day conference will afford insurers an opportunity to strategize on how to increase penetration among member countries. For Joy Business, Pius Kujobaka.
The Ghana Statistical Service is set to roll out a statistical framework which is expected to improve the use of historical data in policy formulation and socio-economic decisions. Government statistician Professor Samuel Kobnenim explained that the use of tailored statistics in each sector will be crucial in the design and implementation of successful interventions. He spoke at the 2024 Africa Statistics Day.
Education remains a cornerstone of Ghana's national development. To enhance outcomes, the Ghana Statistical Service is leading the charge to provide innovative solutions backed by the use of data. Speaking at the 2024 African Statistics Day, government statistician Professor Samuel Kobnenim emphasized the need to use historical data in informing policy decisions.
Ghana Statistical Service works closely with all government ministries, departments, and agencies. So on a day-to-day basis, they contact us for current statistics based on their policy document. We would want to have an improved collaboration with them where we can really sit with them not only at the monitoring stage but at the policy design stage, and that is why we are coming up with what we are calling the statistical framework, which does not give policymakers only levels and prevalence of different issues, but avert their minds to different interventions that will lead to the expected outcomes.
He cautioned that the lack of data-informed decisions could limit the success of policies.
If we continue to make decisions at the national level and at the regional level, and we are not focusing on granular data, it inhibits our ability to achieve the success that we want. The second information that we're putting out there is that historical data, in this case, education, should be the basis for forming decisions post-2030 when the education strategic plan has ended. So historical data are critical. The third issue that we've put out there is that private institutions, other MDAs hold a lot of data set, and today we've demonstrated it, and we are calling on all MDAs to come join Ghana Statistical Service so that we can have a pool of data that sits on the Statistical Online Bank to inform the success of current policy interventions.
The African Statistics Day is commemorated annually to deepen public awareness of the significant role statistics play in all aspects of our social and economic life. With a focus on education, the 2024 edition was held on the theme, Supporting Education by Modernizing the Production of Fit-for-Purpose Statistics.
The Institute of Directors Ghana is hopeful of improving the state governance, particularly across public sector and corporate institutions. According to President of the Institute, Reverend Angela Carmen Appiah, the Institute, in partnership with the State Interest and Governance Authority and the Registrar of Companies, will enforce the governance code amongst public institutions to ensure sustainable governance practices. She spoke at the 60th Institute of Directors Corporate Governance Excellence Awards and the launch of the 25th anniversary celebration of the Institute.
11 individuals and companies were honored for championing ethical leadership through good corporate governance, transparency, accountability, and integrity. Professor Douglas Boating received the Influential Director Award, while Ivy Appiah was recognized as the most innovative director. Reverend Angela Carmen Appiah, President and CEO of the Institute of Directors Ghana, in an interview with Joy Business, emphasized the Institute's commitment to deepening partnerships with relevant state authorities to enforce ethical governance across state institutions.
Looking into the future, we are hopeful that once we get a critical mass of like thinkers, then we should have wealth creation, sustainable development, and then that broken record of the Auditor General's reports, we shouldn't be hearing them on a year-to-year. It's a very disgraceful, disheartening story. And now with partners like SIGA, the State Interest and Governance Authority, who have also stood up, and the Office of the Registrar of Companies herself, we have a bright future, because they are all not just bared their teeth, but they are really ready to bite, and we form great partnerships looking into the future. We should grow our economy and be happy to live in the world responsibly.
The Bulk Oil Storage and Transportation Company was named Outstanding Institution in the Petroleum Refining and Related category. Its board chair, Eko Hackman, shared some insights with Joy Business.
The award is a recognition of the tremendous strides that the company has taken towards instituting good corporate governance. So what we've done is a number of things. One of them was to introduce policies and procedures to govern the conduct of staff and management, as well as the board in the company. We've streamlined the activities of the board as well and implemented reforms there also. And these have culminated in improvement in efficiency and performance, which has translated into profits for the past 3 years.
The institute does not only focus on big corporations, but also offers guidance for directors in small and medium enterprises.
Thanks so much for watching Business Live for today. I am Pius Kojobaka. We have more stories for you when you log on to myjoyonline.com/business. There you go. See you at 8 p.m. with Prime Business.